All right, welcome everybody to August monthly meeting where we're going to be covering the life cycle and covering rapid growth during the crisis. But to break a few things down and let you guys know about what's upcoming at TIE Atlanta, our president JP James. So JP, over to you, sir.
All right, really exciting. We're in August, which is unbelievable, especially if you've got kids who are about to go to school, maybe not go to school, stay at home, do more online learning. The year has really gone by quickly, but also for those of us as entrepreneurs, it could be a great time or it could be a terrible time, or I haven't really seen a lot of in between. And so that's what TIE's here for, and definitely going through this topic, but we've got a lot of exciting stuff coming up. So we are in the third quarter, and we really only have a couple more major events that are coming up. Obviously, the massive TIECon, we're going to talk about that. And then finally, in the fourth quarter, we're going to be focused on mergers and acquisition and getting your company prepared for it. So we've got a great series of monthly meetings. This is definitely one of them. Amin is going to send in the chat right now the link for you to be able to log on. Just click subscribe on the TIE Atlanta YouTube website. And then each month as we post new videos, you'll be able to get an email update about the new content. We know that not everybody is able to make each one of these meetings. At the same time, make sure you make the monthly meetings. Why? Because we have a interactive breakout session, which we don't know how long it's going to be, but we're planning even next year that all of our meetings are going to be virtual as of now. So we want to make sure that we engage with you. Definitely, if you can't make it, check out our YouTube videos. So an amazing panel today. Leticia will be going through introductions. It's super exciting to have this conversation, but definitely do not drop off after the panel conversation. We'll be having breakout rooms, and we've got an amazing list of charter members and individuals who are willing to give back and lead these breakout rooms. So very excited. Also, the speakers will be in breakout rooms. These have been pre-assigned. Make sure that you register at least a few days before the event, and then we'll make sure that we can partner you up with companies and industry relevancy as well. Super, super exciting. Amin, again, is going to be sending out this link in the chat. We've got probably one of the most exciting, amazing, brand new programs this year called Access. And Access is focused on mentoring and investing in underrepresented communities. We have this great luxury in the Atlanta region of having so much diversity. So we've partnered up with Startup Runway, which is also partnered with Launchpad and Zane Ventures. And we are not only a co-host, we're a co-sponsor, but TIE Atlanta Angels is a major investor within this community. We'd love for you, if you're interested in investing, to learn more. But more importantly, we're about to have this event. We've been working throughout the entire summer, the amazing volunteer staff and the extended staff from TIE. Thank you so much, Paul, for your leadership, and Amin and Arthi and Ritika. We really appreciate all the effort that you've put in together to make this a super success for the first year that we're launching it. So we also want to make sure you save the date. Really, really different format. So if you've been to TIECon over the past decades, we've had speakers, we've had the conference, but one of the most important things that you always miss out at a conference that's going to be online is the ability to interact. Well, what we've done is we've curated some amazing speakers, some amazing content that you can only get at TIECon. We're breaking up the first day focused on early and growth companies, and then the second day focused on scaling the company and getting ready for an exit with amazing mentors. And we're going to be doing workshop sessions. So if your company is in a phase from startup to exit and you want to get direct advice, practical information, and get guidance on how to actually go through that process, this is the conference to be at. We'd love for you to join, and we'll send you some more information that you can sign up right now. Our organization has really evolved from the years in the past to today. So we don't look at our sponsors as sponsors, we look at them as partners, but more importantly, since everything is gone crazy with the virus and a lot of chaos in the marketplace, the sponsors have stepped up, and we've had an amazing number of breakout side sessions dealing with PPP, how to do valuations in the crisis, what's going on in the equity markets, how to manage your commercial real estate strategy with everything going haywire in the commercial markets. We've gone through a lot of legal strategies as you're dealing with everything that's going on. And these amazing sponsors have stepped up, done amazing presentations, and you'll be hearing a lot more of those presentations coming up throughout the rest of the year. Again, if you missed out any of those sessions, we recorded all of them, and you can go to the TIE Atlanta YouTube site and you can actually subscribe. So when any of the new videos come up, you'll be able to get first access to it, and we'll send out a link on the chat as well.
Thanks so much, JP. With that, we're going to go ahead and get the start of our program going here. And to introduce our moderator, Leticia Latino, is going to be Eric Enser, our board member. He'll do the intro, and then we'll get started with the panel with introductions. And then post that, as JP said, stick around because we're going to have the breakout rooms, and you guys have been assigned, and we'll open that up after the panel. So over to you, Eric.
Thanks, Amin. Leticia, thank you so much for agreeing to moderate this panel for us. I've known Leticia for, I don't know, probably 20 years now. She's been an executive in the telecom space. Her company, Neptuno, has built over 10,000 cell towers of one kind or another in the Americas. She's a co-author of a best-selling Amazon book called Women in Business Leading the Way. She hosts a podcast called Back to Basics. And she last year was appointed by the FCC Chairman Pai to chair the Job Skills and Workforce Committee of the FCC's Broadband Development Advisory Group. So a very accomplished executive, and the thing I admire the most about her is her company and she are always looking for the new great thing to get involved with, and the amount of energy she brings to everything she does is truly amazing. So Leticia, thank you very much, and it's all yours.
Thank you so much, Eric. And first of all, thank you for thinking of me for this session, and then for introducing me to JP, Amin, and the TIE Atlanta community. I've been very impressed just in this time that we prepare for this panel. A few thoughts. Obviously, these are unprecedented times, historical times. Nobody in the world has ever dealt with this before. So to you out there, if you feel overwhelmed, if you feel that you don't know what to do, you're on the same boat that the rest of the world is. So I think that's important. Something that I focus on in these days is to stay calm, steady the heart, and focus on what matters. I think that has been something that I keep saying to myself. And but what better advice that this amazing panel that the TIE Atlanta has brought to you today to discuss rapid growth in times of crisis. And I'm gonna do a disservice if I try to introduce any of these people because they're amazing. So I'll allow them, some 30 seconds or so to introduce themselves. So I'll start with Cynthia Fisher, who is, among many other things, founder and managing director of WaterRev. Cynthia. You're on mute, Cynthia.
Thank you, Leticia. It's a real pleasure to be here. And my background is really being a life sciences entrepreneur, serial entrepreneur, and probably the most notorious business that I did in the healthcare space and life sciences was ViaCord, a cord blood stem cell banking company that I founded in 1992. That company, we raised venture capital, we took it public, we sold it to PerkinElmer in 2005 off of NASDAQ, and it still exists today within PerkinElmer, and I would estimate somewhere between a $750 million to maybe a $1 billion business. It's not separated out on their financials. But, and since then, I have actually invested in a lot of companies. I sit on a couple of public company boards, and invested in novel water technologies as well through WaterRev. But it's a real pleasure to be here, and it's been absolutely a fun ride being an entrepreneur and mentoring so many young entrepreneurs that have built beautiful businesses as well.
Thank you, Cynthia. I mean, I've read all you've done. It's truly inspiring. Next on our panel is Karan Ishwar, president at Argenbright Holdings. Karan? You're also on mute. It happens to all of us, don't worry.
Hey, Karan, we still can't hear you. I know you're talking, but the audio's not coming in.
I know you like that too, jeez. Oh boy.
All is well. You guys still can't hear me?
Now we can. Now we can. Are we still having some issues here in Karan? Is it just me? I think we're having some issues with
Karan, you just try again. I think you muted yourself one more time. So can you try that one more time? Still on mute.
I think we may have gotten an, oh, that's you, JP, talking. Yeah, Karan.
Yeah, let's, Leticia, let's go to James, and then we'll see if Karan can get back online.
Perfect, good suggestion. Okay, so James is James Rosseau, founder and CEO of the Corelink solution.
Sure. Yeah, I spent most of my career in financial services. I earlier started out at JPMorgan Chase on the staff side, leading large-scale operations, and then spent several years in our credit card business there, and then moved to Allstate, where I presided as president of a new business there. So really had a great opportunity to start a new business inside of a large company. Allstate was a $34 billion company at the time, so great experience there. And then went to a company called LegalShield, where I presided as the president of the business-to-business side of the company, and grew that to be a larger portion of the company, and then was the chief commercial officer and helped flip that company there, and then left to be the CEO of my organization. So my experiences are across financial services. I also serve on the board of DeVry University, and I'm also an author as well.
Awesome, thank you, James. Karan, shall we try this again? Let's see.
And this, yeah.
Hey guys, can you hear me now? Is it better?
Yes, we can.
All right. All right, so I definitely got to take being very tech savvy off my resume after this one. That was not impressive as a start. But anyway, so take two, Karan Ishwar, president of the Argenbright group of companies. We're a workforce solutions provider that focus in the area of human capital services, in the security services, facility services, and aviation support services space. We employ over 35,000 people in the US. Quick background, I'm from India originally, and had an investment banking and private equity background before moving here. And in 2013, had a coincidental interaction with Frank Argenbright, who's the owner and the founder of the Argenbright Group, and moved to the US in Atlanta in Jan 2014, and came here as an unpaid intern to help Frank grow the business. And in the time frame of the last 6.5 years, we've grown from a $70 million company that was losing $5 million a year to north of $1 billion with industry-leading margins. So it's been an exciting journey, and happy to be here, and very fortunate to be a part of this journey, as well as fortunate to be associated with the TIE, and happy to share any of my experiences that may be beneficial to everybody listening.
Thank you so much, Karan. So before we go on to the questions, I wanted to mention to everybody out there listening, after the panel session, we're gonna have breakout rooms. So don't leave, because you're gonna have the opportunity to get more close and personal, and maybe even ask a few questions to the panelists. So now let's get it going. So I cannot avoid, when I heard all the backgrounds, to pinpoint the fact that Cynthia, back in 93, as you say, 92, you had the vision to pioneer into stem cell research and founded ViaCord, basically creating a new industry for which there wasn't any detailed legislation or governance. Can you share some of the challenges you encounter, and how were you able to grow the business when a lot of the rules weren't set yet and capital investors were probably skeptical about the product to begin with?
Yes, thank you. In in the life sciences and in healthcare or biotech, a lot of companies for starting their businesses, it's a long road and you need a long runway until you can have proof of concept, proof of product, and even be able to raise capital. So in fact, it took me about 7 years to raise my first 11 million into the business. And within 6 months of that first 11 million outside capital, we raised a total of 60 million within 6 months after the first 11 million. So you can imagine those first 7 years were really long and hard, but we're not cash flow positive. So how do you go about building a business with friends and family and putting investment capital in? And I think what is really important is you do need to find the capital, but you also need to find the creative capital, which is deferred payments, and also economic ways to do things. For instance, I like to joke and say that, if I saw the Wall Street Journal came and it had a rubber band around it, you can be darn sure that I didn't buy rubber bands. I reused the ones that came in the Wall Street Journal, and those were part of our office supplies. So you have that mentality throughout your organization. But I think the one thing that's really important to know is that each step of the way you can be creative on capital. But in the healthcare sector and life sciences, it's really about I call it the P's. You're really looking at delivering a novel concept or a new industry to patients where you're going to make a substantial impact to improve their lives. And you want to be able, whether it's a new drug, a new biologic, and in my case with Viacord, it was a medical service with a new science, which is a stem cell science. You're looking into that. You really have to look at delivering to the patient. And at the end of the day, it's, as almost all of the entrepreneurs that are on this call today and those on the panel know, that it's also really about the people, right? So delivering to your customers, ours happen to be the patient, but it's really about the people that you build in your organization and in your supply chain, and throughout how you treat those people, how you attract those people, and having the A team, right, all along the way. And in the life sciences, what was a real struggle, obviously, in those early years, was a lot of it's also about setting up your legal structure. Because you're going into pioneering a new field, you got to look at patent law, for instance. And patent law is very specialized. So through 2 degrees of separation or connecting with other successful entrepreneurs, you find out who's the best of the best. And in fact, I'll give an example, is finding a specific patent attorney who had already patented the a mouse, had been able to been used to knew the science, the stem cell science on mouse technology, then he would know it on being able to go to human. And believe it or not, in those early days, getting an opinion, I did the paralegal work. I'm going back on the P theme, to work with that, to save money on the cost, but it also helped me as an entrepreneur know the space very well as we looked at freedom to operate and get a patent opinion. That ended up saving the day many years, a decade later, because we did it right. So I think when you're looking at a health sciences company, you're looking at how do you get to that product? And it takes oftentimes a couple or several years to validate that science. And it's about delivering on a quality product and a quality service at the right price. So then you also have to say, what is that pricing going to be along the way? And as you look at government and looking at your legal structure, going back to the people, what was really impactful was that we had to have the best of the best on legislative, because we were looking at an FDA reform bill where we could protect our business by having the right to bank stem cells. And we leveraged legislative law, we leveraged regulatory law, which is a whole separate avenue within FDA. And then we had business law, just general business law, as well as patent law. So in a life sciences business, you have really a lot of groundwork. I'm going to go back to another P word, which is preparation. So the more you're prepared, it helps you weather the storms. And also is a persistent way to look at contingencies all along the way to prepare for being able to put your product into the marketplace. But it also gives you credibility all of the way, because you have now developed a group of people to be able, through your persistence, to look at opportunity. And what played out in the end that helped the business in several inflection points of hardship, whether it was an economic hardship, a time, was having the right preparation along the way, having dotted the I's and crossed the T's, and seizing the day at opportunity with a ton of persistence. So that helps, as long as also knowing that you need to have the runway and you need to have capital enough to get to that next stage of inflection where you've proved enough on the science, or you've proved enough with your team that you can then attract the next stage of capital to grow and expand rapidly, but you've done it right. So I'm hoping that that helps on sort of how that plays out. But it's 2 degrees of separation, because so many people are available to provide professional support and defer payment. And they in themselves, like your accountants, your lawyers, are part of your team as well. And I will tell you, I was so grateful for so many people that came in and helped us, even setting up a scientific advisory board of multiple disciplines that could advise, and a business advisory board before we had an official board of directors. I went to them for their advice, and I knew what I didn't know. And I complimented myself with hiring a partner and a team that basically were 10s, or at least 9.5s in their respective fields, that they would be stars and we could lean on them to bring us to success.
Wow, thank you. That just posed, gave us legs to ask so many more specifics. And I knew you've seen the whole cycle from when you got the idea, I call it the napkin, where you probably wrote it somewhere and you visualize it, and then to be able to exit your business in the way you did it and then keep doing it. I mean, you touched so many aspects of the operation, all of them. But what stays with me from what you say is the long runway. I think that's something that we get impatient and we want things to happen right away. So that's definitely helpful. Thank you. So with that, I'm thinking, Karan, you joined the company you work for with a specific mission of growing the company. And by the time you joined it, it was already no small company. It was, if I'm not mistaken, grossing about $70 million in revenue. But at the same time, it was losing money when you joined it. Can you talk about the set of specific actions that you took to be able to turn it around, and that resulted in it becoming $1 billion company today? Now we're talking pure, let's grow this baby.
Sure, happy to do that. So, just to take a step back, obviously now in hindsight, it sounds, like things kind of worked out in the way we had originally planned, but it never does. And I think anyone who's been an entrepreneur or led a business knows that there's always, things change almost on a day-to-day basis with respect to how you plan things and how they shape out. With respect to me, to take a step back with respect to why I came here, it's always the big picture or the overall strategy that Frank and me had, and what we wanted to get to was, it was important for us conceptually to hit $1 billion in revenue, but the $1 billion was not a number that was driven from a financial perspective, but it was driven more from a perspective that our overall aim was to disrupt or innovate in an industry that hadn't seen a lot of innovation over the last few decades. So that was the overall ambition. And it's very hard to do that when in our business, at least, when you're subscale. So at 70 million, when you're losing $5 million a year or 400,000 a month, you really can't be focused on innovation, right? So you needed a certain number of employees, you needed a certain base for it to work. And that was our overall plan. So, that was the first vision that we had when we kind of came together. And I think, then we started looking at, okay, the business clearly was not in sync with our vision and we needed to make a lot of changes. It was a time when the business was clearly oriented in a different way. The management team was not all on the same page with respect to the big picture that we had laid out. So a lot of micro and macro steps needed to take place, and none of these, as we know, take place overnight. I mean, anything with respect to a turnaround takes a certain amount of time. Starting off from the low-hanging fruits of literally going over customers that were losing money and not strategic in nature, and exiting those customers gracefully to the fit into the overall picture, the big picture strategy of the company at that point, and going down a few levels below them as well, and really realigning the team, getting the right people for the right roles, and setting up the right org structure. And then what I did operationally was, again, this is maybe a little too micro, but getting down to really understanding the 3 or 4 KPIs that impact our business that can be affected or impacted by everybody in the organization down to the lowest level. So to drive accountability and responsibility to the lowest level possible in a manner that people understand and can be simple in terms of transparently looking at those metrics on a very granular level, but also on a very strong cadence, say weekly or even daily. So I think those drove to a lot of immediate benefit. But even then, the process of transition from loss making to break even to marginally profitable took several months to achieve. And at that point, when we started, we weren't even financeable. Banks would not touch a company that was losing that kind of money. So, when payroll was a big issue when I first joined, it was like the Wild West. I mean, it was literally a fire a minute, right? You're just trying to put one fire out and there's 3 others that are blazing. So we went through all of that. Focus was to at least become profitable as quickly as we can, so we can get a bank in and get our working capital facility put in place, because we all know in business it's hard to grow if you don't have some bank financing at least to get you through the initial working capital requirements that a business has. We did that, and as we continued to evolve, we were able to refinance and change that up multiple times to set the right capital structure in place. And then once we started going from the stage of, hey, we're no longer fighting to survive every day, but we've actually built something that's profitable, and we're able to grow the business, then we started focusing on acquisitions, our ability to start getting financed by the right kind of institutions, and making those strategic acquisitions that either filled gaps for us geographically or from a service line. We wanted to re-enter. When I joined, the company was just purely a security company. Today, like I said earlier, we're in facility services and aviation. So our plan was always to re-enter those verticals. So we were able to do that and accomplish those goals. So I think it was a series of steps that kind of got us to where we needed to get, but none happened overnight. And today we're at a stage where we can actually deploy the technology that we want to deploy and do things on a much bigger scale. And then I think the people side of it can never be overemphasized. I think that clearly the team that you put in, the people that you have, you can attract very different talent when you're at 50, 70 million compared to when you're at 100, 200 million to when you're at $1 billion. And also you need different kind of skill sets, different kind of people, the processes you need to put in place, the systems that you can afford. Not every company that's at 50 million or 60 million can afford a workday, but you've got to figure out what you can get at the size that you are and make do with it to get the best results, go to the next step, and then reset and figure out what the next step holds for you and what you need to get to the next step after that. So we've had to keep doing that at every stage in terms of people, process, systems, and we've had that evolution. So that's kind of in a nutshell of kind of how I would describe the journey so far.
Thank you, Karan. Really, really interesting. And there's going to be a few questions. I'm already reading some of the participant questions, and we have a few that are going to merge well with what my next question to each one of you would be. So, but you, Karan, and Cynthia also mentioned an aspect that is very important, the people and the team you have. And I know, James, that you have led organizations that have experienced extremely fast growth. And I know that this is also one of your area of expertise. In your opinion, can the management team grow with the company, or rapid growth might result in you not having a sustainable leadership in place?
Yeah, I mean, I think it depends on where you start from, but my experience, in the last company I was in is that you need to evaluate the team as you go through the different growth stages. In the last organization I was in, we had a situation where the founder grew the organization literally from his backyard, right? He saw a need in the marketplace after an unfortunate event that he had. He started the organization. He took the organization upwards of $100 million and continued to grow the organization with folks I would call utility players, right? A lot of different people who could do a lot of different things that were talented in different ways. As he entered the first private equity purchase, if you will, and started to go through different things, you saw those different players and those different utility structures, if you will, start to stretch beyond their capabilities. And when I came into the organization, what I saw was a lot of different things fractured in different places and the need to really upskill. And one of the things I think as leaders, we often have to look at is not ever, when we can, going cheap on people, right? That's the place we need to invest most and really try to get, what I like to say, the right people in the right seats, and really look at our accountability chart and think about the inflection points and put the right people in the right seats. So for me, I think about 3 organizations I've been in, JP Morgan Chase, Allstate, and LegalShield. In each time, think about those inflection points, evaluating what I really need in those seats, the expertise, the skill sets. I like to say people who have scar tissue, who have lived through the peaks and the valleys and have come out of those valleys and can tell those stories, right? And have persisted and fought their way back through those challenges and gotten back to the peaks. And then have really can tell that story and help guide us through from their seat and get there. So my answer would be, again, depends. But what I've seen most often is you need to level up the people as you go through those processes.
Awesome. Thank you so much, James. So remembering that we are also focusing on the crisis aspect of the conversation. And there's big companies that are dealing with it too, not only the startups. Cynthia, you are part of the board of directors of Boston Beer. We all know that in most cities, people cannot go drinking at bars as they used to, and that for sure must have impacted revenue growth and strategic planning for this year. What are some of the actions the company has taken to mitigate the impact of the pandemic, not only on the product sale, but also, most importantly, on the workforce?
Well, thank you for that question. And yes, this pandemic has been a huge shift on consumer behavior, right? And consumer access. And so in the beer industry, and Boston Beer is the maker of Sam Adams, the Truly beverage line, Twisted Tea, and Angry Orchard, among many others. And the company obviously had at retail sales in bars and restaurants, draft lines. And many restaurants, unfortunately, as we all know, have had struggled in this time. A lot of mom and pop businesses, a lot of great restaurants have had to shut their doors, and some that have made it, they've made it because they've changed their business model to be able to do takeout, for instance. So what Boston Beer experienced was a huge shift from and a huge loss of the draft lines that we had in bars, where we actually brought back the actual beer that we had, and basically did a lot for the retailers to say, look, we're going to do what we can to help and assist. And separately, we knew a lot of our customers there before all the stimulus money was given, they were struggling, right? So we set up a multi-million-dollar fund to make sure that restaurant waiters and waitresses, staff could have access to income through the donation into the fund. So one is, it's about people, it's about preparation and planning, and being there and getting creative to support your customers on many different levels. So being a good corporate citizen was really important. In the meantime, because Boston Beer had worked very, very hard on delivering quality products to our consumers, what mattered to us was being available to our consumers. So we shifted, and now we had a big demand for cans and products in cans and bottles that consumers would feel would be safe to drink, and they would drink in their homes. And we didn't know which way the market was going to go. We just knew that our customers could count on a quality product, but we had to shift very quickly on how we produced our beer and how we could get excess capacity in can lines and how we could distribute through our back end, carry it through from the supply chain, but then also be able to distribute to, we're in a 3-tier system. We had to go to our wholesalers to get to the grocery stores and the big box stores like Costco and Walmart and others, Total Wine, that were selling beer and alcohol. So the consumer shifted to drinking more actually at home, and also wanting safe product in its own separate containers. So we had to shift to make sure that our supply chain and our vendors work with us. And what happened is, unbeknownst to us, even though we were down almost 30% from retail, what happened is we grew substantially, well beyond our wildest imagination in the product lines. So from retail sales in the grocery and in the box store. So this was a phenomenal shift for the business, and we had to be flexible and fast. And then the other thing that was most important, Leticia, was we wanted to make sure our people were safe and that we could run our breweries. And so we were so fortunate because one of our advisors on our board was the head of all operations and supply chain for Procter & Gamble. And they had operations in China and faced this virus well ahead there to make sure their cleaning products and their consumer products were able to manufacture. So we went to our board for advice. How do we keep our employees safe and keep running? And so we ordered tests ahead of the curve. We got doctors, primary care docs to set up shop that were close to us to test. And we had healthcare workers come in to make sure no one had a fever. And we had a process. And then we also got PPE, where we learned through China that there was going to be, through our P&G board member, that there would likely be a shortage. And what they did in China is they got their own PPE equipment manufacturing and manufactured there. And so we were able to, one, support local hospitals because we got access to PPE very early on through using 2 degrees of separation, which is our network, and directly getting advice from people that were ahead of the curve before it hit our country. So we were ready, and we never expected this level of growth, but it all comes back to treating your people right, making sure they're protected, making sure they're safe, making sure you had a plan, and so far so good, and we've been operating and growing substantially during this crisis time beyond our wildest imagination.
Well, thank you for that, Cynthia. It shows that even, the strongest and companies, they have to pivot fast and shift and adapt because no one really knows. People think, oh, you have it all figured out because you're big, you have resources. It doesn't happen that way. It falls faster when something like this happens if you don't have the right plan and the ability to adapt. So that, I think, is going to be very valuable for the audience. So now I'm going to merge a question that I had with a question someone else asked here for, and I'm going to give it to Karan, because Karan, I heard you say somewhere that being financeable for scale is different from being financeable for working capital. And it's almost intuitive, but the truth is that there's some people, and this is where I'm going to merge it with one of the questions from the chat, is, when your company is losing money, how do you get the banks to finance you? So what are the key metrics in both scenarios when you're trying to get finance for scalability and for growth, and when you're just trying to get by and get your working capital in place as you described?
Sure. Happy to talk about that. I think, overall financing in itself is a very nuanced and complex topic, depending on what industry you're in and what stage of your life cycle your company is currently in, right? So I think when you look at the situation that I came from, where we were in our life cycle when I joined the company, clearly at that point, losing as much money as we did, part of the reason we were probably losing money was our inability to get financed, because all of that is interlinked, right? If you don't have access to capital, you can't go after certain contracts which may be more beneficial or profitable, so you're stuck with certain situations that you can't get out of because they're giving you at least cash flow for you to survive. So it's all interlinked, and it's kind of a pretty negative cycle to get into. So I think the first focus for us was to try and at least get to a break-even point as quickly as possible. I think if you take a step back and you look at things from a macro perspective, no bank or, for that matter of fact, any private equity investor or other equity investor is sitting there holding their money and thinking, which company can I not invest in today, right? That's not what they get paid to do. They all get paid to deploy capital, and banks don't make money if they don't deploy capital. Equity investors don't generate results or returns when they don't invest the money. So, to understand your story really, really well and to be able to sell your story, I think is the most critical aspect of this relationship that you have with your lender or your equity holder as you go to market to raise money. So I think that part, even if you're, for example, a company that's gone from a loss-making situation to break even, or you're still loss-making, I think you still can make money or not make money, raise money, as long as you're able to demonstrate with your story that you're headed somewhere that is going to make you a lot of money in the future. So if you're looking from a bank's perspective, you've got to understand the landscape. You've got small banks, you've got medium-sized banks, you've got big banks, you've got non-banking lenders like ABL lenders, equipment lenders, cash flow lenders, mezzanine lenders. It's a huge landscape of people out there. So you got to really understand what fits your model, because it's not a one size fits all. You can't take the same story and go to a cash flow lender as you would go to, say, a small size, highly conservative bank that has a small balance sheet. So really understanding who your story caters to within this landscape, I think is step number one. Understanding your own story, of course, is step zero, because if you don't know your own story, you don't know what you're selling, and know where you're basically heading towards. So you can demonstrate both in terms of past performance and track record that, hey, things may not be great, but, I've improved from here, from, whatever, Y to Z. And from here, I'm basically going to go to B and A and whatever else you're going to go. So I think it's the story that you got to basically paint for them to give you all the perspective, right? I mean, we've refinanced multiple times every a year or every 2 years, because when you're going in this kind of journey where you're going from negative to break even to positive, your first deal is going to be your worst deal, and then it's going to get progressively better as you keep improving your financial performance. And as it gets better, you got to take advantage of the market and be able to negotiate better deals for your company and better terms that allow you to grow and grow further. So it's always going to be that way. The first one, you may have to just shake hands with the devil and bite the bullet, but you get what you need to get to the next year or the next step in your journey or your cycle, and then progressively improve from there. Even now, just to tie it back to the current COVID crisis, like I said, a good part of our business has aviation exposure. And as soon as COVID hit, aviation pretty much became the biggest bad word or negative word that you can hear within the banking space, given the extreme reductions that all airlines saw in terms of flight volumes and passenger traffic. So, when April hit or March hit, and going into April, we were in negotiations with one of our lenders to increase our facility with them because our business was growing. And they said, no, we got to hit pause because, aviation is too big a risk right now, and we don't want to put more money. So at that point, I knew what the business was doing, and I knew that we were going to have 3 or 4 tough months where the volumes were going to affect our revenue. But I also knew that given our size, our competitive positioning in the overall landscape, that we were going to actually be really, really big beneficiaries of COVID, because a lot of our smaller competitors were either not going to survive, or the reduction in volumes was either going to put them out of business or force them to shrink to a level where it was going to be much harder for them to get back up. So basically what we did was we looked at the landscape again, and we said, okay, one of the biggest banks in the country is not able to do this because their balance sheet had certain issues, and their exposure to certain airlines or certain other industries was causing them to think a particular way. I literally reached out to about 10 other banks, smaller banks, which I knew had different levels of exposure to aviation and hopefully no exposure in some cases. And one of them, or actually 2 of them, were really interested, and one of them was interested to move at the pace that I wanted to move. And we were able to close a deal in less than a month to not just expand our facility, but also get better terms, lower interest rate, the whole works. So it's doable. I think it just takes time and effort to identify the right partner and how your story fits in with what the bank is looking for and your ability to sell it. And this is something we've done. We have not used any broker or intermediary for a while now. So we do all our deals myself. I mean, it's the networking and knowing the space, understanding who is looking to deploy, because each lender is also in a different stage in their own capital raising cycle. So some need to deploy faster than others at a particular time. So having a good understanding.
I think Karan might be frozen, but I think he should
And
catch back
that's why
up.
these guys had the confidence in putting this money. Sorry, I think someone else said something. But anyway, that's kind of in just how we went about it and how I see the landscape.
Okay, thank you. We lost you at the very end, but I think we got the idea. Thank you, Karen. I think you said something that it's, at least to me, very important. We all have a powerful story behind us. And I think we get lost in the numbers, in trying to get the financing that way. In my personal case, my father founded the company 50 years ago. He left Italy, he went to Venezuela. So if anybody follows the news, the past 20 years haven't been the best. And so when I started the company in the US, I was hiding our story because of the fear that they would say, oh, they're in Venezuela, we don't want to finance them. And it has been an uphill challenge. But the day someone told me there's a powerful story behind each one of us, and you start owning the story when you do those pitches, I think it really lands better than when we try to find the financing just applying by the numbers and the metrics, because then you don't differentiate yourself. So I think that's something that I take as a great feedback from you. Thank you. And I remind you, all the mentors are going to be in the breakout room. So I know you have a lot of questions. You're probably going to have an opportunity to go there. And I think we have time for one more question. And so James, for a good closing, I'm going to have to go with this question. You give speeches on how to achieve $1 billion growth from your $1 million company. I think a lot of people will have to relate to that one. So what can you share with our participants as a closing for the main session, as main takeaways from it?
Yeah, I think one of them is, don't play a defensive posture. Right? Rely on your cash flow. If you've got good cash flow, use that cash flow to be opportunistic, even during these times to scale. Right? I think sometimes in these situations, people can try to retrench and be more defensive. And what I've watched larger companies do is use this time to find opportunities. So as an example, whether it's product extensions, whether it's thinking about distribution in a different way and figuring out ways to block your competitors. And that's one of the things I did, for example, at Allstate. It was not necessarily the best market conditions at the time, but to start that new business and think about, listen, we have agents that do one thing, but we have, we'll always compete against Geico and State Farm and these other players. How can we launch into the market in a different way and create some disruption and do something daringly different? And what we did was we figured out, well, the products are good, but we've got to create different distribution that will give us an opportunity to do something daringly different. And that's what we did. And so we launched an initiative that literally was disruptive to the industry. Insurance industry is not necessarily an innovative and progressive industry. And we decided to launch something that would create a new product that we had to go to every regulator for and get permission to do. It took us 18 months to do it. But then once we did it, we had first mover advantage. We were able to go into the market with something totally different, touch a new, totally different consumer segment. And that gave us a 3 to 4 year lead to do that. And what's important about something like that in a time like this is you always have to look at the customer metrics, right? And so for insurance, as an example, where you have, anytime someone takes an auto policy, they shop every 6 months, right? If you can get them to get auto, home, and then life, you've got them for life. And so that's what we did. We created something that was daringly different in the product, daringly different in the distribution, and it created huge returns when we were able to do it.
Thank you. Thank you so much, James. And I think, unless Amin has a different plan, I think this is a great moment to thank the panelists.